What's up guys, welcome back. My name is Mike.
And I'm Brit. And so a few weeks ago we made a video going over our stock portfolio, what we're invested in, stocks, index funds, etc., how much we're invested, and why.
Something we didn't dive much into, however, was how much money we've been able to make from these investments.
And that's what we wanted to go over today.
So today we'll be breaking down how much profit we've made from our current investment portfolio over the last 4.5 to 5 months or so.
So we technically didn't start investing until the end of 2020. That was into our Roth IRAs. However, we didn't invest anything outside of those. And as you're probably aware, you can only invest $6,000 per person per year into a Roth IRA, which comes out to $12,000 for both of us.
And it wasn't until mid to late April of this year, so about 4.5 months ago, that we really started taking investing much more seriously and have since then taken our combined portfolio value of about $13,000, so our Roth IRAs plus a little bit of profit, to now over $110,000. As much as we'd like to say that that's all capital gains, most of that difference is just money that we've been actively investing either from our working income or our savings. However, there are a decent amount of gains in there that we could take if we wanted to, and we're about to get into it.
So we have 3 different portfolios, and each one has its own unique goal and intention. And we wanted to break down each portfolio individually and go over the gains from there.
So the first portfolio we're going to be looking at is our Roth IRAs. Brittany's and my Roth IRAs are basically mirror images of each other, of one another. Like we have the exact same holdings and everything, same weights to them. But the goal of our Roth IRAs is just to be a backup to everything else that Brittany and I try to do investment-wise. If nothing else that we do works out, at least we have a Roth IRAs to fall back on. These have all index funds in them, so no individual stocks. So other people are managing these for us. They're funds with low expense ratios, as you guys are about to see. What we're using right here is the Charles Schwab app. Those of you familiar with this are going to be familiar with it. Those of you who aren't, I'll try and do like a brief tutorial of how things are laid out. So on the left-hand side here, we have the asset that we're invested in. So VUG, VGT, VTI. In the middle column is our cost basis. That's the black number. Cost basis, if you guys aren't familiar, is like our average buy-in cost. So we have 11 shares, a little over 11 shares of VUG. Our average cost for those 11 shares is $249.92. In the middle column, the green number below is how much the price of that asset class, stock, index fund, or whatever has risen over and above or below our average buy-in cost. The right-hand column is how much those shares, however many shares we have, are worth. And in the green number below is our overall profits. So the first holding we're going to go over in our Roth IRAs is VUG. I think this is my Roth IRA. So I have 11 shares, 11.039 shares of VUG. Brittany has the same. Average buying cost, $249.92. Our total capital appreciation for VUG is $650.86. So basically just double that, and that's between Brittany and I total, like how much money we've made from VUG.
That's almost a 24% return, so 23.59%. The next one is VGT, and that one has gone up $598.23 or 18.26%.
Okay, and the last fund we have in our Roth IRAs is VTI. This is the Vanguard Total Stock Market ETF. The weight we have with this one in our portfolio right now is 50%, so our intention is to have this ETF make up 50% of our Roth IRAs. We have 30.215 shares in mine, $1,054.08 in gains. Okay, so total gains from our Roth IRA, $2,303.17 just for me. Doubling that gives us $4,606.34. Okay, and the next portfolio we're going to be going over is what we're calling just our growth portfolio. The goal of this one is to buy into companies that we see huge potential for growth in the next 10, 20, 30 years. We're also doing a little bit of speculation in this portfolio, not much, but we do have 2 or 3 stocks in here that are very volatile right now, but we think could grow a lot.
So our first holding is Google, and that one has gone up $2,725.52, which is an 18.4% return.
All right, next is Amazon. We have 3 shares of Amazon for a total of $536.22 return. Now, this one, our average buy-in price is $3,343. Amazon's been like up into the 3,700s just into the recent past, so we kind of have a feeling it's going to go back up there eventually. I personally think Amazon's not really going to have trouble getting up to like $4,000 or $5,000 or $6,000, maybe even $6,000 over the next few years. We'll see. I don't know for sure, but that's kind of where I see Amazon going potentially.
So the next one is Apple, and we have 20.03 shares of that, and it has gone up $178.53. Only gone up since when we bought in $8.91 per share.
Okay, next one is Coinbase. So we have 7 shares of Coinbase. This is one of our speculative plays cryptocurrency company. Not many shares, 7 shares, $310.95 we've made so far. This one is more, it's more volatile. I mean, I think it IPO'd or DPO'd at like in the mid 340s. It went up to like $440 or $420, and then it like tanked real quickly after that. And it's kind of been like a roller coaster since then. Okay, next one is Corsair. This is another one of our speculative plays. This is very similar to Logitech. If you guys are familiar with Logitech, it's in the gaming space, in the streaming space. We are down a lot of money in this one. We're down $619.43. We have 160 shares, average buy-in price of $32.69. I feel like Wall Street hasn't really caught on to this stock yet.
Yeah, or seen the potential behind it.
Yeah. I think they're eventually going to overtake Logitech and be even bigger than Logitech, because Corsair seems to be much more in the streaming space, whereas Logitech is just kind of in a broad computer market, whereas Corsair is computers, but even more specifically gaming.
So the next one is Facebook. We have 6 shares of it, and it has gone up $133.61.
Microsoft, love Microsoft. We have 10 shares in this portfolio, up $144.07 so far.
And after that is NVIDIA, and we have 11 shares of NVIDIA, and it has gone up $362.36.
Yeah, I love NVIDIA too. I wish I had bought more. I almost bought like no joke, I almost bought like $10,000 of NVIDIA before they released the news of the stock split. We'd have like double our money.
Yeah.
If we had bought in back then. Okay, next up is Palantir. I like Palantir too. This is another speculative play. We have 30 shares of Palantir. We're up $164.89 so far. Palantir is another one that's just like a roller coaster. Some days they're up a lot, some days they're down a lot. Palantir is a very interesting company. We went kind of in depth on that company in another video, so I'm not going to go too much into it here, but yeah, interesting nonetheless. All right, the last stock in our growth portfolio is Voyager Digital. This is another one in the cryptocurrency space, another one that we're kind of considering speculative. We have 200 shares of this. This is another one we're also down a lot in, down $507.05. Voyager is not as big as Coinbase is, but they seem to be very innovative. They have a lot of goals. If they can make a bunch of these goals happen that they have, I think they're going to be a huge company.
So overall, when you add everything up, our grand total in our growth portfolio is $3,429.67.
Yep. All right, next up on the list is our dividend income or dividend growth income portfolio. So this is kind of a mix between stocks that pay dividends and stocks that we also kind of expect to grow a lot. In the future, this portfolio is going to be much more meant for income, like passive income from dividends. But right now, it's just mainly growth, solid companies, and a little bit of dividends. The first company we have is Ally Bank. We love Ally Bank. We have 10.083 shares of Ally. We're up $48.53.
And after that is Apple, which we went over before. In this portfolio, it's gone up $1,593.64.
So when I was funding this portfolio, I was like, all right, let's just get $10,000 of Apple, $10,000 of Microsoft in here real quick, and then we can add shares of Apple and Microsoft to the other one after that. That's why we have a lot more shares of Apple and Microsoft in this one. But okay, yeah, next, Microsoft, 38 shares of Microsoft, $1,698.10 gain there.
So next are the ETFs we're invested in. So JEPI is the first one, and it is up $63.84.
Yeah, this is the only actively managed ETF that we have in our portfolio as of right now. Their expense ratio is like 0.35%, so a little on the high end. So this one has like a 7% dividend yield every month, and also seems to be keeping track of the S&P 500. It seems to be matching the S&P 500 overall fairly well. All right, next one is SCHD. This is a very good ETF if you're trying to mix growth and dividend payout. I think the dividend here is like 3%, 3.5%, maybe somewhere in there. So we have 60.357 shares of SCHD. We don't have all that much capital gain here, $53.25, not much. I heard very good things about SCHD. I've looked over its graphs and charts and holdings and everything. I get why people are interested in it. We haven't made all that much money so far though.
So the next one is VFH, which is Vanguard's financial ETF. It is up $75.52.
This is another one that pays a little bit of a dividend. I think it's like somewhere in the 2% range. Okay, so total for our dividend portfolio, $3,532.88 gain. All right, so if we add everything up, our Roth IRAs, growth portfolio, income portfolio, Roth IRAs, $4,606.34. Growth portfolio, $3,429.67. Dividend portfolio, $3,532.88. We also have a portfolio on Robinhood that we don't have any screenshots of because we're kind of trying to transfer everything over to Charles Schwab. We have $568.33 gain there over the past 4.5 months. So the grand total for everything, $12,137.22. Now this is as of midday, September 1st. Things are going to be going up and down from here on out. So some of these capital gains are from our Roth IRAs when we first funded them back at the end of 2020. So we're going to just take $1,100 off of this. In the last 4.5 to 5 months, we'll just say that we have a capital appreciation of about $11,000.
So this is a lot to us over the past 4.5 months, especially with us being new to investing. It averages out to be over $2,000 per month when you stretch it out over the 4.5 to 5 month time period. And this is something we've been working really hard for to get to this stage in our life. And though it may not be as large as other YouTubers that you may have seen going over their portfolios, we're really excited about it.
We feel like we're kind of in a brand new stage of our lives where we're not just working for our money, but we're actually like able to see our money start working for us. So, will we be taking profits anytime soon?
No.
No, we're just going to let compound interest do its thing. There is one thing that we may have to cash out some investments for, and that is the possibility of buying another house in the future. We may or may not do this anytime soon, but it's something Brit and I are talking a lot about. If we need a larger down payment than what we have in cash set aside on top of our emergency fund, then we'll probably sell out of some things, take some profits. We'll have to pay capital gains taxes on those, which is not going to be very fun, which is why we're going to try and just keep as much in our investment portfolio as we can for right now.
So how have we made this much profit in this short of a period of time?
4.5 months is not... it's not a lot of time really to gauge a portfolio's performance. It's really not nearly enough. But there are some things that we have done that, at least our intention of doing those things, is to help us become as wealthy as possible as quickly as possible.
Basically being very intentional with our money and getting the most return for it.
Yeah, in terms of our lifestyle, like how we're living, we're being very disciplined. We're not buying things that we don't need. We stick to a budget. And in terms of investing, we're doing a lot of research. We're listening to conference calls. We're looking over charts, financial statements, financial reports, 10Ks and 10Qs. We're researching CEOs and management teams in hopes that will eventually pay off someday. And we'll be able to get enough experience doing that we can kind of see trends in the market maybe before other people see trends, and we can get into things early. So hopefully all this work will pay off that we're doing. If not, I guess we'll just throw all of our money in an S&P 500 fund.
Yeah.
So with that being said, guys, we hope this information was helpful or encouraging or inspirational, or maybe not inspirational. maybe it's an example of what not to do. I don't know. We hope you guys enjoyed the video. If you did, please give it a huge thumbs up. It helps us out tremendously.
And subscribe for more. You can also follow us on Instagram at It's Mike and Brit. We post there every now and then.
Yep. Thanks again, guys. We'll see you next time.
Bye.